Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As you can see, different background. I'm actually in Utah at a resort for the weekend. Tried to do a little skiing, see if I can make sure I don't break any legs. If you see the picture on the wall behind me, you might be able to figure out where I am. All right, so as we do each and every week, the stocks that you see on your screen now will be the ones featured in this video. And as a reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature on the recording. All right, again, no hat for the Chuck Norris hat. I didn't want to risk it on the plane. So we got the regular Nike Evo chart hat on. So let's take a look at the chart of the S&P. And following the big news of the week this week, which was the FOMC meeting, and it wasn't that the meeting results were going to be so watched, it's the commentary that was going to be watched. Nobody expected the Fed to do anything this month, but they wanted to see what was the Fed going to say. And they did say that they still expect to have 3 rate cuts this year, and that seemed to calm the markets. And when we take a look at the chart of the markets here in a second, you'll see what I mean. But just on the commentary, we have now the Fed Fund futures down at around a 50-something% chance of a rate cut in June. It's 50-something% in July as well. So we've come down from an 80% chance of a rate cut in June. So maybe kind of hedging a little bit. But the big news was everybody wanted to see were they going to change from 3 to 2 rate cuts this year, and holding it at 3 seemed to calm the markets. And so if we take a look at the chart of the S&P, you can see that did give a little bit of a bid back to the market after some consolidation. So we consolidated here for a couple weeks, and then we moved back to the upside. So now we've resumed that just kind of slow, steady 45-degree angle march to the upside, which is normally indicative of not severe corrections. We will have a correction at some point in time. I think it's kind of a buy the rumor, sell the news thing. Once we finally get to an actual rate cut, I think that's when we could see a correction in the markets. But for now, we've resumed this move to the upside. And if I take away this trend line here, you can see that we had gotten a little bit above that 10-day moving average. So even though we had a little bit of a down day today to finish the week, still a positive week for the markets, and more specifically, or more importantly, a break from this level here where we had consolidated, as I said, for a couple weeks. So we take a look at the chart of the 10-year rates came back down a little bit on that news. We put the Elliott Wave on there. I mentioned that I didn't really see the catalyst to get that low, and I still don't see it for where that wave 5 projection is. I do think that this is going to relabel this chart, and we're going to move into a bit of a trading range. As you can see, we're kind of moving in there already on rates. So I don't think we go significantly higher or significantly lower. Maybe once they start cutting rates, we can break the bottom of that trend line. But for now, I think we're destined to be range bound within rates. We take a look at the VIX, and we've been talking about the VIX quite a bit during Trade Finder. And by the way, if you haven't registered for Trade Finder, you can do it with the link provided on the video. We're now during market hours, so we have moved Trade Finder. We did a survey and asked you guys what time you would want it. So it's 1 p.m. Eastern time that we do Trade Finder now. So it's really cool that we do it during the market hours. But again, we've been talking about this channel that we had formed here on the VIX, where we had kind of a series of lower highs and then higher highs. So, higher lows and higher highs in this channel move here. And then we've broken out of it. And that was the question that we've been asking during Trade Finder. What direction were we going to break, to the downside or the upside? So we're getting down towards this area where it's acted as support. And I think the question we need to ask now is, are we going to break below this? Are we going to head down towards 10, 11? It definitely is a breakout of that down trend line, but we're getting also into an area where we've had support for quite some time. So the VIX is kind of a question mark, I think, as to what happens next week. I do think that when we get to the end of 2024, we're going to see that we had more volatility this year, but breaking to the downside certainly is conducive to that slow, steady rise, that 45-degree angle rise that I showed on the chart of the SPY. The dollar has also firmed a bit here, and I think this chart's going to relabel as well. I don't think the dollar is going down that low, not unless countries decide that they're going to bail on the dollar for some reason. For now, they're still intent on putting money into the dollar with the amount of debt that we have. It surprises me, but I've talked about that each and every week, so I don't need to rehash that. But we're getting back up into this area here of long-term support resistance right around 104. There just seems to be an area where the dollar has pegged pretty much this entire year, even starting towards the end of last year. It's a good channel. I've talked about this as kind of the sweet spot for the dollar. It's not so high that it's affecting the exchange rates of international companies and hurting the bottom line, and it's not so low that it's showing that people are really starting to get concerned about our debt. Maybe I'm more concerned than the rest of the world is about the amount of debt that the U.S. Is accruing. We talked about that in the past couple of weeks, that we're adding $1 trillion to our debt every 100 days. I don't know why that's not concerning, but it doesn't seem to be to the markets right now. So if we move to the Dow and take a look at the DIA, very similar, moving to the downside, but as with the S&P, just kind of correcting a little bit of an overbought condition that we got. And when I say that, I mean just a little bit of separation from the 10-day moving average. You know the rule I cite all the time. No security in any time frame gets very far away from the 10-day moving average. So we've just been kind of, especially the Dow, just ticks right along that 10-day moving average, which is the lime green line on your chart. And we've been watching the Qs. We've been wondering if the Qs were ever going to relabel. So far, they haven't. That 5 just keeps hopping over with the new highs, so it hasn't relabeled to a 3. Now, with rates starting to eke back down, a little bit of a bid back under the big tech stocks, if we take out that high, will it relabel this time? It didn't relabel yesterday, and we didn't make a new high on the Qs today, so no chance for relabeling. But that's something to keep an eye on, because just as a reminder, we're still in a wave 3 on the S&P, and we're still in a wave 3 on the Dow. It's the Qs that are the outlier that are still in the wave 5. Now, when we look at the Russell, the IWM we've talked about, that just marches to the beat of its own drummer all the time. It does these 20-point ranges. We've highlighted this over the past couple of years. It was in a range between 190 and 210. Then the range dropped down to 170 to 190. And now we're clearly back up. As you can see, we've tested 210 twice now. So we're back in that range between 190 and 210. If I put on the Elliott wave, I think it's pretty interesting here. If that wave 5 is indeed done right there at 210, based on Elliott wave rules, if you're not familiar, if you're a newer viewer and not real familiar with how Elliott wave works, when a wave 5 ends, if it's less than 100% extension, it retraces back to the previous 4. Look where the previous 4 is, right at 190. So that would say that would be perfectly in tune with this channel between 210 and 190. So even if we start to head lower, which we did have a bit of a down day here on the IWM, it should hold at 190 again, at least for now, as we move into whether or not we're going to get a rate cut in June or not. So that's going to be what everybody looks at. Taking a look at the USO, a little bit of a bid here. And with my traveling, I can tell you that, one, I don't like going to the gas pumps. I like the big V8s. You can go to our website at ewotrader.com and you can see the cars that I drive. Not fun at the gas pumps. But also, I can tell you there's so many people on the road. If anybody's ever gone to a Buc-ee's, if you have those anywhere near where you are, big travel stop, and it's jam-packed. With my recent travel, I haven't seen that many people in there in a long time. So people are still on the move. The economy may be weakening, but it hasn't broken yet, at least by evidence of people still, pardon me, traveling and moving around. And so you can see here that we're moving up in this wave 3 here. We got a little bit overbought on oil as well. You can see the separation from the 10-day moving average. In the last 2 days, we've tapped the moving average here on the low. And a nice wave 3 move to the upside. And by the way, I just want to remind everybody, I talk about this a lot. This 4 does not mean that the wave 4 is underway. It means that that is a projection that if the wave 4 were to start, that's where you can look to find support. And then up here on the wave 5, that's where the wave 5 would go if the 4 started now. The algorithm likes this. And by the way, this software is from the Hub organization, HUBB.com. This is a legacy version. They have a new live version that's in beta form, and everyone can get it for free. All you have to do is go to hub.com, HUBB.com, and you get a free copy of the new software. It's live. You have live Elliott Wave, and when we start using it, which we will be very soon, we're going to have live Elliott Wave during Trade Finder during the market hours. You're going to be able to see the Elliott Wave counts move as we're doing Trade Finder live. So it's going to be really cool. So go ahead and get your copy now, your free copy, while we're in beta form here, and get used to it while we move through and get into that live show now on Tuesdays. All right, so as we move into some of the stocks of interest that you all have asked about, we can take a look at copper. Some of you wanted to look at copper, and I thought I would show you what I've been looking at, which is the COPX. That's the copper miner, so it's not the actual metal. You can see we kind of got a little vertical, but there's clearly a bid under the metals, and that may stay now with the fact that we're back into a little bit of a drop down in rates. I don't know how far we can go, but we're showing copper now. A lot of times we talk about gold and silver, and again, in Watch Trade Finder, we talk about those each and every week. But with these recordings, I try to keep concerned about your time. Keep an eye on that. So there's only so many stocks that we can show each and every week. And by the way, I do read your comments. If I can answer them, I will. I get to as many of them as I can, but I read each and every one. And this year, we are giving away every month a free L3 subscription on our website at evotrader.com, and that includes the new Impulse AI directional trading, which features zigzags within wave threes, our volatility strategy, which is triangles for breakouts, and our AI-based time strategy, which is stocks that move sideways. So it's a few $1,000s worth of subscriptions, and all you have to do is leave a comment, and you're registered every single month. So we're going to do that each month this year. So make sure that you leave a comment under the video, hit subscribe. By the way, let's try to move up towards that 50,000 mark. If you like this, y'all are very kind in your comments, tell somebody. And let's try to get this up to 50,000, and then we'll have a big giveaway there as well. So we want to do whatever we can to help and improve your own trading success. I've been doing this a long time. I'm not going to say that I've seen everything, because as soon as you say that, you see something that you've never seen before. But I have been around a while, and I want to share those things with you as best that I can. So the copper looks like it's trying to rest a little bit here, a little consolidation following this move. It got a little vertical for me, but that's a good consolidation when we've just been kind of coming back down towards this 10-day moving average. Got a little doji there today. We'll see how that plays out at the beginning of next week. Stock you requested was also SE. Now this one's interesting because it came up and filled this gap. So we filled that gap, and after that wave 3 high there, we moved down, and look where we're finding support, exactly where that gap was. So this is curious to know whether or not we might be starting the wave 4. We got a little vertical here. We've given some of it back, but we are at an area of support. And I would say if we can't hold 55 here, we probably are coming down to this wave 4. The next level of support is in the area of where that wave 4 forecast is, kind of where these highs were back at the end of last year. So looking at SE, I think that we have to keep an eye on this 55 level. Looking at the 10-day moving average, we're underneath the 10-day moving average, so it's got to show us something. It's got to break back above 55. If it can, perhaps we can extend that wave 3, but this one's certainly questionable, being underneath the 10-day moving average and sitting right at that support level. I would say if we break 55, we probably see 50 very quickly. If we can get back above 55 and back above the 10-day moving average, perhaps we can extend that wave 3. PayPal, this is an interesting chart as well. So you all asked for some really interesting looking charts. You can see here that we're in an area of resistance right through this area right here. This is around 67, 68. And if I turn the Elliott Wave button on, you can see there's no 5-wave pattern. So we're all in corrective mode here on PayPal. If we look at the 10-day moving average here, we are just kind of coming back. So we're above the 10-day moving average. And if we're going to break above this 65 level, that's to watch because we've got this gap over here from last summer, right there around the 75 level, just below 75. So a little bit of backing and filling here, maybe some consolidation underneath this trend line. If PayPal can break above it, and you can see not a good day today, but once again, it was overbought moving into today, so I wouldn't be concerned there. But if we can break above this area of resistance, we could quickly go up and fill that gap. So you can see a bit of a tradable move here on PayPal, but we've got to break this trend line first. It's a pretty good point of resistance, as you can see, from all those previous highs. Tesla, boy, we've been talking about this one. Elliott Wave has nailed this one. We've been right on top of it. We talked about we needed to hold 200. If it could hold 200, maybe it could have some sort of a bounce. It didn't do it. We said if it broke 200, it would come down to 180. And if it didn't hold 180, which it didn't, it would be 160. And then I saw the comment on here that someone is short Tesla and they want it to break that 160 level. Katie bar the door, as we talk about. I love the fact that our little quips, robisms, that they call them, are making their rounds. And the reason for that is that if we do break 160 on Tesla, it is a Katie bar the door. We're probably looking back down here at this 100 area, which is where we were at the end of 2022, beginning of 2023. There's not a whole lot of support. 160 is it. If it can't hold there, then it's a big vacuum between 160 and 100. So if you're short there, I would probably keep that on. If you want to be a little more conservative, I try to give an aggressive and conservative view. Everybody has different risk tolerances, and you know what your own are. If we break 160, then yeah, it looks like a good short to me. I don't know where the catalyst is for Tesla to move higher. They've reduced their shipments to China because they've been very aggressive on their own EV space. There's so many EV vehicles out there, and now we have companies saying that they're backing off of them. And we also hear dealers saying that they're not accepting the F-150 EV version of the trucks because people still want the carbon fuel-based they're kind of like me. They want those that big power from the V8s. But where Tesla's going to get its next bid from is something that I don't see right now. So what we do is we watch these trading ranges, and we talked about last week that sitting here on 160, we could get a tradable bounce up to 180, and that's what we got. And that was because that was a little bit oversold at that point in time down here. So we came up, we've tested 180, and we backed off today. If we can break above 180, then we may test 200. But again, that break below 160 is something to watch, and you could start to see some movements significantly to the downside on Tesla. But there's your points to watch. If at some point down the road we could get back above 200, then maybe we could find a bid in Tesla again. But like I said, I just don't know where the catalyst is for that to come from. So Tesla is certainly an interesting chart to keep an eye on. Bitcoin, which had its big run and now is consolidating here in this 65 to 68,000 range is where it's going through consolidation following this big run here. Personally, I don't think that the run is over in Bitcoin. The halving starts on April 18th, as you know. We've talked about that so many times. It seems like perhaps there's one more run here going into April 18th, but we are still trading around that 10-day moving average. We go back and forth. We kind of bump it on the highs and then back off a little bit. But this is good consolidation as well from a pretty strong run that we had in Bitcoin. And as you know, we kind of pair off Bitcoin and Coinbase. We show you Coinbase. So I thought I'd show you that because that looks pretty strong. We had, again, a pretty vertical move, a nice corrective move back down on Coinbase, a little bit of move to the upside. Looking at the 10-day moving average, we tapped it on the low, kind of a doji there today as well. So we can see if Coinbase is able to break above this a little area of resistance here in the 260 to 270 range. If it can do it, I think there's a bigger bid to go here in Coinbase. I think we at least see 300, which we're not very far away from, so that's no big call there. But the algorithm tends to like this area up here around 340, and it could very well continue that in the wave 3 as we have another month before that April 18th line. And Coinbase has all the altcoins, everything else trading on it as well. It's not just everything to do with Bitcoin, where MicroStrategy that we look at periodically seems to move with Bitcoin now because they bought so much of it. They actually had a debt offering just to buy more Bitcoin. Isn't that interesting? I'll bring up the chart even though it wasn't on the list just to show you real quick what I'm talking about. It had a pretty vertical move, came back down, and then everybody liked the fact that they had a debt offering to buy more Bitcoin. I don't really get that. You go further into debt, but I guess if your view is that Bitcoin's going higher, which a lot of people have that view, then MicroStrategy is probably going higher as well. So lots of things to talk about. And as we finish off each and every week, we'll look at the INDA. It finally did show a little chink in the armor here, a little bit of a move back down, but so far we're holding nicely at that 50-day moving average. So the question is the wave 5 over? If so, then maybe we break that 50-day moving average and come back to the previous 4. As I mentioned earlier, those are Elliott Wave rules. That's what happens. So we'll see if we stay there, hold that 50-day moving average. We do have a negative cross here, the 10-day moving below the 30-day, and I have those on my screen, not because I think the 30-day moving average, which is the fuchsia colored line, is any sort of a big support resistance line. It's just a lot of ex-market makers, floor traders that are friends of mine have told me that that's something that they look at on the floor as far as where we're going to get the next trending move. They watch for the 1030 cross, a positive cross, which we had back here, and you tend to have a trend move in that direction. So that was a positive cross. We had a big trend higher in the INDA. Now this negative cross, I know it's kind of weak, but if we continue that, then maybe we do come down and test that wave 4, and then we'll have to see where we go from there. But it was one heck of a run in the INDA, and a test to the 50-day moving average is not something to be real concerned about. Even if we move down to the previous 4, we could start a new impulse move from there. But we'll be watching that 50-day moving average on the INDA and see how that plays out over the next week or two. But once again, if it does break that, then 49 is probably its area of support. So hope you enjoy your weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.